All right, guys, we have Josh here at Husker Nut Josh right here, one and only, literally. Let's go
Come
over.
on, guys.
Come on, everybody. Well, they can't
Leaving me
hear this.
alone.
It's a recording; they're not hearing it. So, all right, let's just look at market conditions and things that I look at. These are some of the things I do during my homeroom class with the 10th graders that I have. So, SPX was a very interesting day today, and the end of the day. Look at these two huge candles. It actually ended up slightly up because this was the close the day before around 39.54 or so. It didn't show overnight in SPX, but if you do MES, it would show that. And then you could just draw the line all the way out. And last 5 minutes did it because it was right at even when I put it on the Discord pretty much. It's like, what's going to happen? Coin flip time. And it happens to go up in the last, 10 minutes. Pretty big candles there. 39.44 to 39.70 even at one point, and then it hit the high or hit the close at 39.66. So maybe we'll see. Possibly could continue tomorrow, or this could have just been a random occurrence. I think it's probably a random occurrence. You can see what the futures are looking like tonight right now, and they're pretty much flat at that point. So not really saying much because of those two candles. Maybe I'll tell you tomorrow morning. If big institutions come in, maybe they like those two big green candles and they might load up, or they might think it's a good level here and then decide to take profits and close, especially if big institutions might have bought lower in the day around 3,900 or so. You could lock in a pretty good profit if they close in the morning. But that might have been the last 5-minute candle as well. It's hard to say exactly. You could see that it went up another 3 points and then dropped back down. So there's a chance that happens. So some of the things I do with my homeroom, and I'll go a little bit further out for the whole day here. So typically we'll look around the day before. So from the day before 39.45 to 39.66, sometimes I like writing just little bars there, add a drawing, do a little rectangles and the high and the low of the day. Another neat trick you could do if you go to the settings, this little chart settings tab, you could extend out the time frame, so time axis, and you can do a lot of bars to the right. Depends on what your minute chart is. It's a 5-minute chart, 20 bars to the right could be usually decent, at least when you're starting it at open. And you can do that really far out if you really wanted to. And then you see a big range there, right? So something that you can do is take your little horizontal bar here, extend it out for the rest of the day, or at least the next few hours if you're doing it tomorrow, right? So this gives you a good idea of the high and the low of the day. If the market ends up being flat today, then I would probably look at the day before and look at this high as well. Oh, there we got a Discord notification.
It's me.
Yep. So we have the high of the day before as well. You could use that as a possible level. And we're not going to go crazy with like 20 levels or anything like that, because we're just looking for a high probability trade here. So if the market opens flat here, this could be a possible high for the next day. And that could be a possible low for the next day. And you'll see around 39.66. We're going around 50 to 60 in the low end and about 50 or 60 in the high end. So you get a pretty decent premium on a one-day expiration on that. Let's do September 2nd though. So right now 39.66 or so. If we go around 60 away, it ends up being a pretty high delta, 0.14. So that's why we tend to go even further away. So if you can make that strike even further higher than where those bars are, it's usually an even safer trade. So assuming market's flat at open tomorrow, could look around the 38.70s, maybe 38.80s, somewhere in that range on the put side. Again, if it's flat, probably want to go iron condor anyway, because we want to get credit on both sides if possible, safely. So we could look around the 40.55, 40.60 in the call side, and then go around 10 widths from there. So yeah, I do have my homeroom class almost every day. Right after I do the alert, but I'm waiting for the kids to come in for the alert. I already made the alert out to Discord, and then I'll explain it to 10th graders so they can kind of understand it. I feel if 10th graders can understand this stuff with just the basics of where the charts are going, then pretty much anyone could. And good way to go with that. So that was just a quick spiel on the 0DTE. There's more to it than that, but that's a good general overview of how to get to it. Is there no one else on the disc? No one else on Zoom? Well, at least my account's really big. It's $198,000. Oh, it's simulated. Oh well. So, bad joke. Okay. Let me go over a few quick things with the futures I was looking at. So if you're in the inner circle yearly or lifetime members, I did post early last week around Friday or so. So it was around 4,200 and I sold a 39.50 put on MES. That was a pretty high delta. I think it was around 0.1 delta at the time. But as you can see, this week was a pretty rough week, down almost every day. Today was just slightly up. And it's actually slightly out of the money right now. I think it's around 0.32 or so delta last I checked. So there's a pretty decent chance it actually might get assigned. If you sell a put on an MES future, you'll be assigned one contract of that future. So it's just like buying an MES contract. If you want to buy an MES contract right now, it's going to be a buying power around $1,100. So you're going to have at least that much in your brokerage account. Buying power could be changed quite a bit if you get assigned a contract over just selling a put on it. They do use span margin to try to estimate approximately how much you'll need. So you're not going to need the full 1,100, especially if it's very close to that 39.55. If it's 39.30 or so, it might only be a few $100s more than what your current buying power is being used. But what I'm planning on doing if it goes below 39.55 is sell a call contract for the next Friday. And we're going to look at pretty much the same strike, to be honest, because unless there's a big drop tomorrow, if it's near 39.40s or 30s, the 39.50s premiums are really high. You can see it's around $60. And there's a 5 multiplier there. So you're looking at $300 in premium for just a week. Now, obviously, if it goes against you and MES starts to drop even more, you could be using up more of your buying power. But at least this would be aspiring worthless, and then you could collect that full $300. Lowers your cost basis when you actually purchase your MES. And could be a way, it's just pretty much wheeling SPY, but doing it on a much smaller buying power. It is more leverage though, so definitely you got to consider that when looking at the risks that are appropriate to it. If you do this for a few weeks, then you're able to get pretty decent premium, you know, between 20 to 40 or so at least. If you do that for a few weeks, you could easily lower those strike prices if MES keeps dropping, and then you could get to a pretty good break-even point and possibly get out of the trade. But I usually try to do those trades where you're going to get a pretty decent amount. Oh, someone's trying to get in, won't let him in. Let me see if he's in the waiting area. Oh, sorry. I'm sorry, guys. There were people in the waiting area and I didn't notice it. How are you guys doing?
Might have to start over.
Hi, guys. Sorry about that. You guys were in the waiting area, but I didn't notice it when I was showing stuff. So if Vuitton is it's I guess Walker's wife's account, but I know it's Tom, I think, and I'm not sure who iPhone is. That JWS on iPhone? I think so. Yep. So how's everybody doing?
Doing good.
I did a quick description of MES, and then I just realized I wasn't sharing my screen the whole time, and Josh sent me it in the chat. So you could hear an audio of me talking. At least there's that. I could just start it over if you'd like. Are there any quick questions before I do this? It only took about 5 minutes or so. So if anyone that's currently here has any general questions, I could cover those first. All right, if not, I'm gonna go over some of the things I look at for tomorrow. Share my screen, that would help. There we go. All right. So if you look at SPX from today, it was a fairly interesting day because it was down for most of the day here. This was the close on Wednesday. It opened fairly low and it dropped pretty quickly. And then right near the end, you see these two huge green candles up, went from 39.45 or so, all the way up to 39.70 almost, and closed at 39.66. So it was a pretty big jump in the last 10 minutes. One of the reasons why we might want to close our positions right before close, same exact thing happened, I think, yesterday, right? So if we look at yesterday's chart, it's like the exact mirror image. It went down two big candles in 10 minutes, and then today up two big candles. So
Hey, Lance, I want to
volatility
get out
is-
real quick. I can't hear you.
Oh, sorry, could anyone
I'm gonna
else
get out
hear
and
me?
come right back, okay?
Oh, okay. And there'll be a recording of this so you could easily watch it. Volatility is 25.66, which is slightly elevated. Did drop a bit today. And there was a big drop in the volatility in the last 10 minutes that did happen to coincide with SPX going up, which is fairly common. It's not 100% of the time, but if you see a big jump up in SPY, SPX, you typically see a pretty down movement in the VIX, and the opposite's true too. So if you have a big up movement in the VIX, there's more volatility, is a little more scary out there. So then you usually see the SPX drop at that point. A few things that I do, and I mentioned this with my 10th grade homeroom class that I have, is sometimes we'll look at the high and the low of the last day or two to get some ideas on where we might want our strikes the next day. So you can see these little horizontal gray bars here. And let me go to the last 2 days. So all I did is here is I right clicked on TOS, add a drawing, and then just put little bars here, rectangles. And I just put one at the low of the day. I'm not super scientific on it. Pretty much got the low points. And then I put a bar at the high of the day. This might be a midpoint tomorrow. If we happen to see MES futures fairly flat, we might open around there. And then if you see the high of yesterday, that might be some levels to possibly consider where you want to be selling premium a little above and below those particular lines. So 39.66, looking at a call, at least 40.20. I'd probably go even higher than that if possible, because it might touch yesterday's high. And the low around 39.05 or so. You get a rough estimate of what the premiums might be if you look at the current premium for tomorrow. So it's 1 DTE. And around 40.10 or so on the call side. It's a fairly high delta. Again, VIX is a bit elevated. I'd go even higher than that if it's going to be a iron condor, for instance, and futures are flat. You're going to look around 40.60, 40.45, somewhere in that range. And you could even test it out. You could click on the bid, go 10 width away, click on the ask. And that's a big range there. You might get 50, 55 bucks. It's hard to say exactly. Sometimes I'll look literally 2-3 minutes before open, and then it moves immediately when market opens, the deltas change, and then the prices are not that close to it. But just general ideas here. For the put side, 39.03, it's around 3900, pretty high delta. Gonna look at least 38.70, 38.80 range around there. If we happen to make it an iron condor, might get about 120, 130 bucks off it, assuming the futures are flat, which we don't know what's going to happen on that, obviously. As of now, the futures are pretty much flat, but wake up tomorrow morning, very first thing you do, don't get your coffee, you got to check MES, right? Yes, and see how it's doing on that. All right. Another quick thing that I do want to mention with Inner Circle yearly and lifetime members, I did sell a put on MES expiring tomorrow, and I sold it around here, 4,200 or so. And it was a 0.1 delta at the time, a little bit higher delta because I wanted to wheel this. So essentially, if I get a sign, I'm going to sell a call against it. It's at 39.55 right here, and we're just above it. So the delta's really high on it, about 0.33 or so. There's a pretty good chance I might get a sign on an MES contract. And then on Monday or even Sunday night, I could sell a call contract on it. But as you'll see, the premiums are very high for that. And we're an extra day out, so the beta will be a little bit less. But if you happen to go at the 39.55 or so, you're looking at $50-$60 in premium. That's actually the premium for MES. Times that by 5, you're looking at $250 or so at least. So that'll be a good return if it happens to wheel next week. If it goes above 39.55, then you'll be able to keep all that premium that received. I only received about 7 or 8 in the put side, but it'll be a good overall return if it happens in 2 weeks. So that was pretty much my spiel there. So anyone else?
Lance, right there. Oh, I'm sorry.
AWS.
Yeah. So when you were doing that last part there, I missed that. You were doing that for Monday, so you're doing it a couple of days out?
I initially sold the contract last week on Friday, and it's expiring this Friday. So what I did
Oh,
is
you
I was
told me that.
looking at-
Okay.
I was looking at the premiums for next Friday, and then I could place a trade Sunday night if I want and get, the weekend an extra evening on Sunday night, or you just do it at market open around there.
Okay, so you're just doing kind of the week long.
Yeah, I'm essentially wheeling a futures contract on SPY. It's the /MES futures. So it's a highly leveraged product, but you're only going to need about $1,000 to about $1,500 in buying power to do it. And the premiums are pretty high because of that leverage. But if it does go against you and MES continues to drop a lot, then it could be pretty significant losses. So just be aware of that.
Okay, well, that's the thing too. Like, it's kind of off the futures here for a minute, but when you talk about the
Right.
big drop, like what happened last Friday, you get a spread that you get locked in. I know you can set on Thinkorswim, you can set your stop loss, but on Robinhood, I got to just manually watch it.
Yeah,
But that's just what sucks with those is when it drops so rapidly. But like,
right.
it's still a winning trade, but it drops so quick. If you have 2 weeks still, like some of like the lows was one I picked. You have 195 or 190, 185, I think, and it was sitting.
What stock was this? You remember?
Lows.
Oh yeah, I thought you meant lows like the low of the price.
Yeah, no,
That's why I was like lows.
Lowe's,
Okay,
the
different lows. Yeah,
Yeah,
I think a few
actually shouldn't
members
pick that
mentioned
good.
that one.
I had a battle with Lowe's actually last summer.
Yeah, Tradetastic. She must have made it yesterday. I think she DM'd me about it because it did go a little below the alert price that I put, but I still kept it on because there's only 2 weeks left in the contract. And it was very close to the stop. So I said it was nothing wrong with just getting out of it at the stop right now. But I actually think I put an alert a few dollars below it, like 192 or 193, I think.
That's what I say, because like with that one, it dropped. It was sitting 210 maybe, I think,
Yeah,
and then it dropped, but it only dropped to like 199, 198, which
yeah,
is still above the 190. Like I said, with 2 weeks, it's like surely it won't drop that far. It hit 194 today, I think. But it's like, do you think you just try and hold on for a minute, or just take 3x and move on?
I would say in general, take the 3x and move on in most cases. But I just happen to hold it a little bit longer.
Oh, because you would normally play, because with your spreads, you say
Yeah.
sell it like $2, just sell $2 by the close.
Yeah. The thing is, it's not going to be the exact same price once it hits a certain delta, for instance. I'm essentially trying to make a prediction on where the strike price would be in order for it to be around a 3x stop. But it's obviously very hard to do that when you're 30, 40 days out. So you can put the mark price or set an alert at a certain price. And if it happens to hit it, you can be very mechanical about it and just stop out whatever it is. Because if it hit the alert price with 2-3 days left, I mean, you can maybe close that out at a profit possibly, but it did happen with 2 weeks left. So you're going to be at a loss at that one.
Yeah, that's what killed me earlier in the year too. That's when that big drop happened this summer, is like they all got stuck, and then just had to ride it out and take that hit. But like this one, it came back actually a little today.
Yeah,
So,
it actually had a low of 192, and
okay.
I
see
should have
that.
got, I would have got out of it, but I was in class during it. And then I guess that, honestly, I got a little lucky. It happened to bounce back up after that. But it's a little too close for comfort in my end.
Yeah,
So
okay.
I just set a mark at 193. If it touches that again, I'm just gonna get out of it. It's not worth the
Okay.
risk. It's a
That's
good
what, yeah, I
question.
got,
It's a good question. I'm trying to do it almost like an art more than a science on that one. Because again, nothing wrong with stopping out on it at this point. But yeah, I think it still has some chance for staying alive.
that's what, I mean, I understand, like I said, that's where I understand the 3X, because you're only losing, like it was 25 premium, you lose $50, if it
Yeah.
got to 75. But then again, it's like that one, it just seemed like it was such a steady stock, it would just stay where it is or go up a little. So it's
Right.
kind of, I was at that tweener point. I missed the point today. I got tied up at work, so I'll check what it's doing tomorrow.
Yeah. You can check the IV on it.
But
The
surely, like,
implied volatility is probably pretty low on it. Wrong one.
yeah, I think it was, if I,
It's about
80 or
40.
90 when I,
Yeah, so implied volatility on the put side is in the 30s or so, which is a relatively low IV, pretty stable stock in general. Just the whole market's been getting hit pretty hard, so that's why it dropped a lot too. But it didn't drop as much as the tech stocks. Those got
well,
hammered.
that's another thought with that, because obviously everything tanked from last Friday through this week. Surely there'd be a bounce. I know you can't assume, but you think there'd be some one green day in the next 2 weeks, right?
Yeah, yeah,
You
possibly.
think?
You would think. That's all we can say. We don't know.
So you can only see so much red.
Yeah, exactly. I guess the more red you, I mean, I'm a pretty firm believer in mean reversion, where if something's dropping way too much over where the average is, like a rubber band that's stretched too much. You stretch that rubber band too much, it's probably going to be launched and then go the other way, right?
Yeah.
So yeah, good chance of it. But again, there's nothing wrong being completely mechanical about them just getting out at a certain strike price. And you could even move those alert prices as you get closer. So if you're at a 190, 185, and 193 is about my limit, I think, at this point.
Okay.
But if it was a day or two before, I might take the 191, 190.5 or so, and then possibly wait it out and see. Because even if it got a little below the one, like 189, 188, it's not necessarily a huge loss. You just don't want to hold the position into the expiration, because then you might get assigned on a short.
Right. Yeah.
And holding your long, you get really screwed on that. And you do the same thing with that as a 0 DTE. Like you don't want to hold it like into the expiration. But
Gotcha. Like that's what happened earlier, even before I got in your group. I had NVIDIA. I had I can't remember what exactly it was. I had like $10 up on the Thursday before expiration, and it still showed like $150 loss. Like I couldn't even sell out for a profit. I don't know what happened.
yeah,
Because I
PayPal
guess
happened
obviously they
too.
go by the you what?
PayPal happened too quite a bit. Nvidia is near its low of the year. It's at the low of the year.
Yeah, that stock killed me.
That might be a good buying opportunity for long term if you like the stock though. But that's just for long term, not for necessarily options on it.
Yeah.
If you had the funds for it, you could consider buying a leap on it. And it's going to be a lot of money though, because it's a high stock price. But
Oh, the
you
poor man
go-
cover call.
yeah, you can do a poor man cover call possibly. It's still going to be a lot of money. You're looking at $10,000 though, so a bit tough there. But
I'd have to win a few more competitions to get up to that level.
yeah. If you were thinking it's going to go up pretty quickly, you could go a little lower delta on the leap, so maybe around 80 or so. It's still a
Okay.
fairly high delta. 0.83 is not the end of the world. $6,400 though is a bit high. But you could consider that for certain positions. Like I know one of my friends does this with TQQQ a lot, where if he sees a big drop in it, like right, pretty much just near the low of the year, he'll buy just leap calls. He won't even do poor man cover calls. He'll just hold it and then try to get out at a pretty good profit. And that's it.
Oh, so he'll just do the buy, the leap, and then
Yeah.
cover call.
Yeah, he doesn't want to get locked in on the covered call part because of his shoots out. And
Oh,
he'd
so
rather
then
just
he'll
get out of the trade completely if possible.
Okay, so would he do it still like the 6 months out, or he just kind of?
Yeah, he goes at least a year. He sometimes goes 2 years out.
Oh, so then when it spikes back up, he's hoping to get that.
Yeah.
Okay.
What
Is
he
that-
tells me is like high was around 91. If it got to 21, it's at 27. He would buy a leap at 15, 14, half of the cost of the current price. So you're essentially, way lower percent than what the high was. And then he just waits for it to go up and sells it. He doesn't do a lot of fancy data stuff with it. At
Oh, he's
times
just
he
doing like a-
might, this is a good one to go over actually. He does this occasionally. Let's go 288 days, maybe around he goes as low strike as he possibly could. Like he wants the highest delta possible. So he'd buy a 15 leap for 2023. And then there's a pretty big spread between the bid and the ask right now. When market opens, it'll be a little less than that, but let's say you buy it for 15 or so. You do 27.84. I'm sorry, do 15 plus, what was I going to say? 15. I'm trying to figure out the extrinsic value on it. So you take your strike price plus the 15 again. It's essentially 15 for the strike price plus 15 for buying it. So you're looking at 30 for that as the total extrinsic cost. Essentially what that means is TQQQ has to go up to at least 30 to break even on it. So it's about 2.16 higher than the current price, right? 30 minus the 27.22. He'll try to sell a call that covers that difference, okay?
Was that your synthetic guy you did that interview with?
He does them every month, so my friend will do this a few months out probably.
Okay.
He'd look around November or so, and he would sell
he'll-
around the $32 strike, and they'll
So
pay for the
he-
extrinsic value.
Okay, so he would sell the calls to cover the difference between the break even and whatever,
Exactly.
and
Yeah,
then just write it out. Oh, that's
exactly.
cool.
Because if you pay that off the first time, then it's essentially the same as buying it. Like you're not paying for that extra, decay and whatnot.
Yeah.
And then he might actually just possibly sell the covered calls every week or month at that point. Or if it got close to that new short strike, he's already at a profit there. He might just get out of it.
Yeah, your friend that you did that interview with, he said something. I was in the car listening to it, where he was doing like the Walgreens example.
Yeah,
He said something about he picks way down, away from the
Yeah.
normal strike,
yeah,
and he said as long as what he paid, something with as long as the premium or the amount he paid is less than the width,
right.
he'll
It's a
make
little
money.
complicated. Yeah, it's the width of the short and the leap, which is usually a pretty high width if you're going really, really far in the money in the leap. So yeah, you won't actually end up losing on it because the delta on your leap is already so high, 0.9, 0.92, whatever. If it continues going up, that delta will be pretty much 1. And then every dollar it goes up, the leap will go up 1 anyway. The short will also go up 1. So it's essentially break even. Like you won't lose money, but you won't make any extra money if it goes up. That
Gotcha.
happened with me with Ford. I mentioned that trade about a month and a half ago, and
Yeah.
had really good earnings. It went past the short. I think I sold the short around 15. It went to like 17.50 or so. It was only about a week or two left, and then it got called in. So I just sold the leap at a profit anyway, and it was a good trade. It was like 12% return. So I didn't mind it at all. So that is another possibility. If it does shoot up, you might get early assign on your short. But if that happens, just sell your leap, and then you're
Yeah,
out.
I got you.
He does some other advanced stuff too. If he like buys another one and all that, but you don't have to make it so complicated.
I was, to be honest, I was shocked a little when he acted like he's been a trader for a while, known his stuff, and he just sticks doing the poor man cover calls.
Yeah, I'm actually in his Discord, and he does like 1 or 2 recommendations a week, so not a ton of stuff there, but pretty good training, and he definitely knows what he's talking about. Like he'll do like put credit spreads against it at times. He'll do ratio spreads where you buy 2 and sell 1, and he's doing some other unique things if it drops against you. Because I'm in a few positions that like most of them I found myself. I did SLV for silver and it went down about $2 from like 19 to 17 or so. So it's down, but it did collect all that short premium. So it's not as big of a loss as it could have been. And I still have plenty of time on it. I think I have like 200 or so days left. So I can still continue to sell those shorts at the same strike. I'm not going to move the strike lower because then if that gets called in, it could be a loss. It gets a little interesting. I don't think it's necessarily for me in terms of like a large majority of my account, but I'll consider doing that with some lower price stocks like 20 or lower. Like I did one with Rocket Mortgage, RKT, and that's like $8 or so right now. So you could test it out. I'll show it on the share screen real quick. Like if you're interested in doing something like that. So RKT is at 7.62. I'll try to buy the furthest expiration you can. January 2024, you have plenty of time on it. And you can buy the 5 maybe. It's still pretty safe. 5 strike at 3, maybe 20 or so. So 5 plus 320, we're getting at 8.2. Is our total cost. Current price 7.6. So if you subtract those, you get about 0.6. So if you can make back the 0.6 selling shorts against it, then it's essentially the same like type of risk, but you put up less money. So instead of putting up $762, you put up about $320, like half or so. So a possible trade with that would be buy the 5, buy that leap, go about a month out or so, and then he's going to sell right as close as he can to the at the money. If you want to be a little safer, go to the 8, and you're getting $32 at least, maybe 35 or so out of it. So you're already paying for almost what half of the cost of the leap in just a month.
So, okay, so buying the long leap you said was 860 or 820, and then
You're gonna buy, yeah, if you buy the leap at 5, it costs 3.3. So about $330, $320.
oh, what was the 820 or 8.2
I
you
just
said?
added that price to the strike price of 5.
Okay.
So that gets you to an 8.2 or so.
I see. So that difference is where you get it. Okay.
Exactly. And Rocket's at 7.6, so it's only 0.6 away.
So you
Not
pay
that,
300.
not that much to do it for a really long expiration. You're at 500 days to do it.
But then like with that, if say you did that like 3 covered calls on it, you would all at 30, you make some money. Would you be able to sell that leap, the long leap, for some money still real early? Does that make sense? Or you just have to ride it out a
Yeah,
while?
if the stock didn't move at all, you could do that and then you'd profit pretty decently because you're getting, let's say you get $35 or so on the short. And let's say Rocket stays exactly where it is. You do that, say 3 times, you would make, 0.9 or so. But the beauty of it is the leap probably wouldn't go down almost at all because there's still so much time left.
Oh, okay. Yeah.
So you would profit a decent amount off it, maybe $80, $75 or so. The leap
But
would go
really,
down. The leap would go down slightly, but it wouldn't go down like a ton, especially if the stock didn't move.
but if you're making money on the shorts, you might as well just keep doing that for a while, right?
Yeah, I think he recommends getting out around 6 months or so before expiration on your leap, because around 6 months, then theta starts to decay that relatively quickly.
Okay,
then
so set a
you
year
don't wanna
out, do
lose.
it for 6.
Yeah, excuse me. And then you could roll that if you want, where you essentially sell the leap, buy a new leap, same strike price, another, 300, 500 days, and just do it again over and over. He's big on keeping a lot of cash, by the way. It says
what?
keep half your account in cash. So a few of the things, like if Rocket drops a bit, you could actually end up buying another leap if you think it's going to bounce back up. And you essentially lower your break even that way.
Oh, because the 2 would average. Okay.
Yeah, exactly. And if you have a lot of cash on the side, you could be able to do that. Again,
Well,
stocks that you're pretty confident it's going to bounce back up on.
okay, that's right. Because I got confused. I thought when you bought a separate one, it was just a completely separate trade. But if you bought the same call, the same stock.
Yeah, he buys the same one. But obviously,
that
if Rocket goes
adds to-
down to say 5 or so, this leap will be worth less. You lost on your current leap, but you could buy a new leap for less. And then you just take the average of the two to get your cost basis of that leap. You could also subtract the premiums you receive while you're waiting for that. So there are interesting ways to go about it. For a lower price stock though, you could pretty much just buy the 100 shares, $760, sell your month out. You could sell it at 8 if you want, make $30. That'll be a good trade if it expires above 8, because you made about $32 plus another 38 or so. So you make $60 off 760, you're getting about an 8% return in a month if it happens to go past 8. So that'd be a pretty good trade in the end, right?
Yeah.
Yeah.
Okay,
so
that's what.
higher price stocks, you could consider doing that with the leaps because it might be too expensive.
Right. Yeah, you
That
can
would
Tesla
go
on
with
all those.
Apple, it's 15 grand, right?
Yeah.
But if you had a decent account size, and you go say a year out about, you could do it for like 7,000 or so, and then leave another 7 grand in cash. You're pretty close
I'll
to
leave
buying
it.
100 shares already, but you can then possibly average down.
I'll leave those ones for Raj and Bobo.
Yeah. I got another minute left. Any other questions from anyone else?
No, I just was jumping in to see what you're talking about. I didn't mean to interrupt your futures
No,
talk.
that's fine. Any other quick questions?
No, appreciate the time.
All
I'm
right,
glad
no
your wife's
problem.
okay.
Oh, yeah, she's doing good. All
I
right,
said
I'm gonna
if,
send the recording. If you have any other questions, feel free to DM me, okay?
Okay, I got a car here if your wife needs for a while.
Yeah, sounds good.
It's a battery.
There we go. All right, have a good night, everybody.
All right, Lance.
All right, bye.